Good evening and welcome back to day 2 of FinTERACT 2021, presented to you by FinBlue, a FinTech Center of Excellence by STPI, and LCOT, adding value through IT. This conference is hosted in partnership with TiE Chennai. Over the 3-day international conference, we hope to get closer to the ecosystem and bring all stakeholders together to discuss and deliberate about the emergent strategies in the FinTech space and under FinBlue's 6 pillars: understanding buyer needs, international partnerships, funding frameworks, benchmarking products, policy and technology, and mentoring and training frameworks. We hope you all had some food for thought from yesterday, and we are very excited to see you back here with us today. Before we head into today's session, let me take a moment to speak about STPI. Software Technology Parks of India, or STPI, is set up by the Ministry of Electronics and Information Technology, Government of India in 1991, with the objective of encouraging, promoting, and boosting the software exports from India. STPI maintains internal engineering resources to provide consulting, training, and implementation services. Services cover network design, system integration, installation, operations, and maintenance of application networks and facilities in varied areas. STPI has played a seminal role in building India's reputation as an IT superpower. Today, software technology parks of India across the country are synonymous with excellent infrastructure and statutory support aimed at furthering the growth of information technology in the country. Today's keynote session is all about technology. Joining us will be Mr. Swapnendu Mohanty, Chief FinTech Officer at the Monetary Authority of Singapore. He joined MAS in 2015 and has been responsible for creating development strategies, public infrastructure, and regulatory policies around technology innovation. Since 2015, Singapore has become one of the top global FinTech hubs, covering a wide range of financial asset classes, including adjacent technology innovations in areas like insurance, digital assets, blockchain, artificial intelligence, RegTech, and green finance. Before MAS, Mr. Mohanty spent over 20 years in various leadership roles in technology, finance, and innovation, with most of his career in Citigroup. He is a member of multiple advisory committees of multilateral global agencies, associations, universities, and governments. He is an avid speaker, global thought leader in FinTech, and advocate of accelerated transformation to a digital economy for solving financial inclusion and sustainability challenges. Moderating today's conversation with Mr. Mohanty will be Mr. Puneet Pushkarna, General Manager at Solmark. He is also the Chairman of Servion Global Solutions, Innovio, and serves on the Board of Governors at IIM Nagpur. Mr. Pushkarna is the Chairman Emeritus at TiE Singapore and a member of the Board of Trustees at TiE Global, where he also heads the FinTech Special Interest Group. Ladies and gentlemen, today's keynote address is on the subject cross-border technology collaboration.
Good evening, ladies and gentlemen. It is my utter delight to welcome on the show Mr. Swapnendu Mohanty, who is the Chief FinTech Officer by the Monetary Authority of Singapore, and Singapore right here. Swapnendu is a rock star, and he has single-handedly really built out the whole FinTech ecosystem, the very word FinTech, to give it prominence from just pure academic institutions to really making it a reality, has been done by Swapnendu. And so I'd like to start, Swapnendu, welcoming you on the show. This show is done by FinBlue Center of Excellence by STPI. Delighted to have you here. Welcome to the show, sir.
Hi, Puneet. Good to catch up with you. So good to see you and good to be part of this program. It has been an interesting year for all of us last year. So we are in the starting of the year reflecting on many things what happened last year. Hopefully 2021 becomes an exciting exciting year for all of us, and we can get back to life as it seems to be changing very fast. Hopefully we'll see a great 2021. Now, I think we can start with a big picture if that's what you want. But let me hear from you what what we're going to discuss, and then we can go step by step.
I think this has been a very exciting journey that you've undertaken, Sapnendu, really from 2015 to 2020. It's been a remarkable journey. You have really conceptualized the whole notion, added tremendous amount of assets to the whole fintech ecosystem. So maybe that's a good idea. Start from the very beginning. Tell us, how did you conceptualize it, how the journey went along, and what's been happening along the way.
Sure. I mean, this I'll take 5 years from 2015 to 2021, 20. I think that's August is the 2020 August is the completion of 5 years for this remarkable journey we had in Singapore. Well, when I started this job at MAS in 2015, we really didn't had a blueprint to start with. It was a period of discovery. It was a period of understanding what to do, how to bring the ecosystem, how to move about, and building what it seems to be a largely a successful effort where we could bring the global community to Singapore to drive this fintech agenda. When we started the journey in 2015, our MD Ravi Menon gave a speech a month before I joined, where he laid out a kind of a strawman plan of Singapore as a smart nation, which our Prime Minister had laid out by 2020 then. And within that smart nation framework, there was a need to build a smart financial center. And the smart financial center was something we started putting together as a frame and see what can be built so that we can call ourselves a smart financial center by 2020. Now, there were many ways to go about and doing that plan, but we started. Thankfully, in hindsight, looks a great decision is to start building what we call as the fundamental ecosystem, which will help us to build this 5-year goal for us. So Singapore can be called as a smart financial center. And when I say ecosystem, it means build the community, build the infrastructure, build the policies which can support this new way of doing finance, and then find a way to build on top of that. So the first thing we looked at when we looked at this whole space is go around and figure out what Singapore can do different, given we are a small market. In fact, when I was to go around to many countries, the investors especially were telling me what fintech can happen in Singapore. You are a country with 5 million people. When you talk about fintech, the first thing the investor thinks is that you should have a lot of people to offer financial services. And as you know, by around 2010, when this whole journey started, the fintech as a concept started, it was all about helping to change the way people think about lending, helping to improve the payment system, bringing financial inclusion as a big part of the discussion. So it is about extending the ability for a larger population to be participating in the banking sector and the unbanked population. So Singapore being highly banked, a small country with 5 million people, really it was hard to believe that what can we do more in this space when it comes to fintech. So we came back after meeting many investors around the world, many policymakers. So we decided at the onset that Singapore will focus on what we call as the backbone of fintech, or the B2B, the business to business side of the fintech, which means anything happens out of Singapore will be the backbone of a fintech which is serving the larger Asian population. So we kind of position ourselves as a hub, as a gateway for fintechs to go and build the solution and services for the Asian market. So the first thing is we designed a process where we became the hub, and the hub is about bringing the right entrepreneurs to Singapore, providing them the policy support, providing the necessary risk capital, the necessary human resource which is required to set up the shop in Singapore, and also build that outfit so that they can start building the business plans for Asia. So that was the first piece. But we also thought that Singapore can become a hub for experiments, because one thing this sector is highly regulated. So you got to figure out the right policy, the right regulation, the optimal regulation on which these new models can operate. And Singapore can be a great place to experiment these new ideas. So we started looking at what are the possible regulatory changes we can bring so that these new models can start operating, testing it out of Singapore, and before they expand beyond Singapore. So we brought in concept like regulatory sandboxes. We also start looking at what are the policies which we can start uh, modifying as a response to this new way of doing business. For example, our payment regulation. It took us 3 years to completely overhaul the payment regulation to a modular structure, to an activity-based regulation, where as you are doing a particular activity, you are proportionately regulated for that particular activity rather than the whole regulation burden on one piece of activity. So that was quite a different way of thinking about regulation, where you're breaking down the regulation to small chunks and applying them in a modular approach, and making the balance between regulation and activity far more optimal in that way. So that's as an example of how regulation we started looking at regulation as a way to improve the way we build financial services. There are many such on the capital market side, on the lending side, on the peer-to-peer lending side, on the insurance distribution side. We went across different asset class and started looking at how to fine-tune the regulation as a way to respond to these new models, new business models coming in the sector. So that's on the regulation side. We also moved, which is very critical for the ecosystem, was to build the talent pool, because ultimately we need extremely bright, skilled manpower to drive innovation. So we looked at our curriculum in our polytechnics, in our universities. We started putting together different programs so that we can improve the skill set of the sector, so that we can have access to good talent. In fact, we looked at the existing financial sector, the bank, the incumbent segment, and figure out how to upskill them so that they can also be part of this whole journey. Now, one significant shift we had from the fintech which was happening in US and in Europe was the way we pursued fintech in Asia. Unlike in US, where fintech was primarily a competitor to the incumbent, in Singapore we started thinking them as part of the shift, which means they'll come as more collaborator, as a more partners who can work together to build a much better financial architecture of future. So in Singapore, especially, and now abroad in Asia, the fintechs here are largely perceived as partner, as a collaborator, and that allows that synergy to be far more optimal as we bring fintechs and the incumbent together. And that's the reason why the market which grew out of Asia was primarily a B2B market, where the fintechs and the banks were far more collaborating than in other parts of the world, which I think today is largely a successful model, where fintechs are part of the banking thinking of, or financial sector thinking of as partners. So skill set, talent development, bringing the banks together with the fintech was the second focus area for us. We actually have the largest number of innovation labs in Singapore compared to any jurisdiction. As now, I think the count is correct, we have more than 30 labs of different financial institutions which are set up here to work with the fintech as the banks are building their own upgrades and their own refresh of their own systems. Moving up the value chain is the ability to create risk capital, because fintechs need a lot of seed capital, a lot of early stage investment. We worked with a lot of investors, including yourself, where we brought them together and started showcasing the fintechs in Singapore, and what they're doing in Singapore and what they're doing outside Singapore in the Asian market. And we had Deal Fridays, we had various roundtables, matching events where we brought investors together. In fact, I'm very proud to say that when I started the journey in 2015, a total fintech investment was around $20 to $25 million. Now this year, like 2020, end of 2020, despite COVID-19, we'll end up with $1.2 billion. It's quite a significant growth in investment within 5 years. So the investment part was the third leg of where we put a lot of focus. And the last piece is building the networking. And this is, I think, as the topic of today's discussion is international collaboration, because you cannot succeed by just doing good in your own jurisdiction. You need to be part of the larger network. And one of the challenges of fintech sector has been that almost 90% plus of fintech are successful within the domestic boundaries. Very few have succeeded from where they started outside the market. So that's an opportunity, and that's where I think a lot of us are focused on. That can we take the success story out of Singapore and start expanding to other markets? So networking was a big part of that puzzle. So we started thinking about how to build a platform which allows us to start telling the story and start bringing the global community together so that we can collaborate better. One example to that is the iconic Singapore FinTech Festival. And I'm sure we're going to discuss a lot on this particular festival, because it started as an experiment. And today it is actually the largest FinTech festival in the world. And before COVID-19 came in, we had 60,000 people joining us from more than 130 countries. And during COVID-19, we did a hybrid model, 3.5 million viewers. We had 5 days event from 40 cities participating jointly in this massive 5 days exercise. And we had, we'll talk about it through our conversation later during this discussion. So FinTech Festival, in a way, was kind of a glue which brought every year the narrative together, the global collaboration together, the partnership together. So that truly helped us to create a massive scale up of the FinTech story, which we started in Singapore. And also the other part of the network is international collaboration. We have now close to 30 plus memorandum of understanding with different jurisdiction on the FinTech collaboration, starting from policy alignment, starting from sharing information, doing cross-border projects, which actually helps to create that scale impact of what we do in Singapore. Examples like Project Ubin. It is the largest public-private experiment in the space of blockchain and digital currency, which is highly successful, and we've been running for 4 years, and it came to a closure last year. But that created a momentum for us to build Singapore as a hub for blockchain and digital currency. We also started talking of building payment connectivity. With India, we built our connectivity on the merchant payment side. We are in the process of launching our payment network connectivity with Thailand. So these are the other examples where you start delivering a promise of collaboration, not by building MOUs, but actually connecting systems, bringing global projects, bringing global partners, delivering products which truly reflect the globality of such collaboration. So that's the fourth leg. And to round it off, I think the most critical part always has been that how to sustain this. And to sustain this, you need to ensure that the policy stays always closely with the changing environment or the changing circumstances. We had to do a lot of policy shift and policy intervention during the COVID-19 crisis. The whole ecosystem could have collapsed during the crisis. So it is very important for policymakers to always respond as quickly as possible to the changing environment around the ecosystem. So policy response to crisis, to opportunities, to changing business models, and the speed at which we can respond became a critical part. To that, we created a Singapore FinTech Association, which gave us the feedback as we think about, as we continuously monitor this ecosystem. And we as policymakers stay on top of that as we respond to such crisis. So I'm going to pause here. And what I've laid out a base framework of how we went about our last 5 years, and I have an acronym for this. We call INNER principle. I stands for innovation, N stands for network, E stands for ecosystem, and R stands for regulation. So the INER is our fundamental framework to build a globally collaborative international hub.
Very, very impressive, Swapnendu. This is, for many of our viewers who have not experienced it and who don't know about it, such a rich ecosystem where you have 30 plus labs that have participated. You have over $1.2 billion of capital that has gone into investment into this. And I know you talked about financial institutions. It's not just the large banks, but over 1,000 financial institutions have now participated in this. I'd like to actually go back to, and you touched upon some very, very interesting points. You talked about talent first and foremost. I think this is one of the biggest challenges that today, we're facing as we're developing the ecosystem. Can you tell me a little bit more about how you're going about developing the talent, how you are helping participate both with the academia, as well as with the industry to develop talent so it's available as you move forward for the next 5 years of the fintech journey?
Puneet, that's a great question because I'll say why. First thing, Singapore is challenged by the size itself, and we have a limited resource pool. I always start a talent discussion by saying that talent is not is a zero-sum game because you can't just artificially create more talent. It is there, and at any point of time, you have a limited resource. And as you develop good talent, you're not the only sector looking at the same set of people. Finance is one of the many sectors which is going after the best and brightest talent. Now, the challenge now, Punit, has been that technology is the common thread of talent. Whether it is health sector, whether it's logistic or transportation, or you think about manufacturing, they all require technology-enabled talent. I think that has put a lot of constraint in this space. So our first response to talent is to widen the the canvas of where to go and look for good talent. And the first thing we do, strangely, you would have thought that we would go to university, we'll go to existing workforce and reskill them and prepare talent. No, the first place we went to build talent is actually polytechnics, and which is equivalent in India, let's say the diploma colleges. Or we also went further down, the ITES, which is in India, the equivalent is ITI, because we believe that these are the early stage talent which can be groomed and be equipped with skill set which can provide the wider base of the talent pool we want to develop to support the sector. So we went, for example, in our diploma institute, which is called the Polytechnic here, we went and changed the curriculum. We built a mentorship program which where we got 100 plus experts and professionals to work with the students of polytechnics so that we can coach them so that they can get ready for the sector. So we went that was the sector we started with. Then we went to universities. Then we looked at the curriculum. A lot of university required the curriculum itself to be changed so that they can create the right skill set for the college students to be ready for the sector when they come out of the college. That's the almost like the basic fundamental upgrade we did on the curriculum, the base colleges and the universities and the postgraduates colleges. Then we looked at how do we attract people from non-financial sector who can be upgraded, upskilled, repurposed to respond to the sector. So we put a lot of programs, a lot of incentive programs, a lot of salary offset programs to support the talent from non-financial sector to come to the sector and get upskilled and reskilled so they can support us. And also the third leg is look at the existing sector, the financial sector, because as technology was getting adopted more and more, there was a lot of redundancy coming on the workforce. Can we reskill this redundant workforce and redeploy on the fintech sector? That was the third leg of that. And fourth is working with global talent, because we all strongly believe that Singapore should continue to be a place where global talent can come, participate, help the ecosystem to grow. Having talent level partnership with the global ecosystem was the last piece of this framework, how we went about building the talent.
Wonderful, Pops. Sobs, you.
So by the Punit, we also last year we introduced a new institution called Asian Institute of Digital Finance, which will also go about building the future leaders in this sector. So I almost forgot that initiative which is started a few years back and finally got it out last year.
Oh, wonderful to hear that. I'm sure many in the audience would like to come and participate in that.
And I encourage them to join that institute because this is almost half of the intake will be from the Asian market.
I think it's a very innovative approach to get a very industry-specific and skill-based rather than just an academic-based education that you're providing. Very pragmatic and very pertinent to what's going on. I wanted to come back to one other point that you also mentioned, that you talked about the sandbox. Being a regulatory environment, obviously the institutions that use the technology coming out of it, the innovation coming out of it, are clearly sensitive to what kind of a backstop can be provided in terms of who is governing this, who's providing the compliance around this thing. So perhaps a little bit about the sandbox. And I do know that in fact, as early as 2 years ago, that you actually had one exit, one of your early sandbox participants actually got acquired, and perhaps maybe tell us a little about that as well, and the journey, either what's happening in the sandbox, and B, what can entrepreneurs, innovators look at post their life from the sandbox.
Puneet, I think before I explain what has happened in sandbox, let me give some definition of what sandbox actually means, because it can get very confusing. Typically, when people talk about sandbox, they talk about a regulatory machine where people go and put together the solution, and then there are exceptions which allows people to operate in this regulated environment. I think the answer is not that simple. There are two kinds of sandbox. There's a regulatory sandbox and there is a industry or a public sandbox. On the regulatory sandbox, we have typically participants who come to us and say that here is the regulatory challenges we are facing for this particular business model. We want to try it out, and we will look at and we will examine whether there is really a policy barrier for that idea. If it indeed there, then we will adopt them within the sandbox framework, and then they will start running on a limited basis of that particular experiment. And just to give you a big difference between what you hear typically a sandbox in UK or other market is the sandbox in Singapore, and the regulatory sandbox in Singapore is a production grade sandbox. What it means that anybody who participates in that sandbox must be running a production grade system. They must have real customer, and the transaction must be production grade. And to that, we as a regulator define a constraint under which they can operate. A constraint can be the number of transactions, the total volume of transaction, and we can put other limits so that it doesn't create a risk when you're dealing with a new model. And that process runs for 6 months, or depending on how much time has been granted. And they come out of the sandbox if the experiment is successful. If there are risks which comes as part of the experiment, we got to find a way to mitigate those risks. That's how a regulatory sandbox operates. That is the reason why almost 95% of the sandbox applicants don't make it to regulatory sandbox, because out of the 95% who got rejected, almost 80% could not explain why there's a policy issue for that idea. What I'm trying to say, Puneet, that there's a huge myth that there's a huge policy barrier in financial sector for any new business model. I have seen in my own sandbox experiment journey, almost 80% are actually pure misunderstanding of policy, and they think they cannot do it. So that's a good news in a way. It's not rejection, it's not a bad thing. It all says that you can do what you want to do without getting an exception from MAS. That's regulatory sandbox. The second is what we call as the public sandbox or an industry sandbox, and which we set up for those people who don't make it. They can try out in this public sandbox, because what essentially they're saying, there's a new technology way of doing certain thing, and that can be experimented, and then industry can get comfortable to adopt it. To allow them to participate in sandbox, we created an API exchange where such companies can come and put their APIs, get the client, do the experiment, and that has been highly successful for us to divert those set of people who want to do experiment despite no policy barrier. So having these two sandbox as a frame, as an infrastructure was very, very critical component, was a as a big enabler for us to see the growth we saw in Singapore. So it's important for any market to have these two sandbox available for this sector to grow. And examples, as you said, there are examples which allowed people who graduated for sandboxes to be not only raise more capital. We have now evidence to show that anybody who graduated from sandbox, after within the first 6 months, they have raised capital, definitely. Second thing, that they're also up for for buyout. One example which you yourself articulated. But more heartening to me in the whole sandbox journey is the kind of companies which came out. Almost half of the graduated candidate from the regulatory sandbox are in the space of blockchain and distributed ledger, which clearly showed that the sandbox worked for us to capture this new era, new technology, new business model, and a new way of doing finance. And to me, one way to understand the impact is that one example is bond e-value. It was a candidate in our sandbox. And what they did, they were the first one in Asia who fractionalized bond for retail investors to buy bonds, which was otherwise difficult to buy because bond tickets are quite big. So examples like that truly makes us believe the sandbox really helps the sector to not only improve and also innovate, also helps the policymaker to frame the right policy framework for this new experiments or new product to succeed in this market.
Now you talked about Ubin as well earlier on, and given that Bitcoin and distributed ledger is the topic du jour, I'd love to just get a few comments from you on that as well, on that initiative that you have done, and particularly in the context of cross-border, how do you see that evolving? Because the regulator's viewpoint is always very interesting, and in many constituencies, actually, it is touted as being, an antithesis to what regulator is trying to do. So your comments there, Sapnendu.
This is a great question, that given the previous question was sandbox, and we say there is a third part to experiments. One is I talked about the regulatory sandbox. Then there's a public sandbox called AP Exchange. This is a third kind of experiment we do in this ecosystem, which I call is a program where the industry wants to do certain things. The regulators believe there is a certain value in doing this, but there's not enough, I'll say, incentive to go forward. So in the third kind of experiment, we as MAS introduce programs, and under the program, we pick up use cases and start bringing the industry together and start experimenting. Project Ubin was one of those. Why did we start Project Ubin? Because by 2016, Bitcoin, blockchain has become a very significant narrative globally. Now, for us to move forward, we need to create an inspirational project where we can rally everybody together, rally the ecosystem together under one iconic project and see we can move forward. So Project Ubin was created, where we as regulator set up use cases. And what are the use cases? That we will use Project Ubin as a way to define how the future payment system will look like. Can we change the settlement system using distributed ledger? Can the central bank digital currency be the new way of doing wholesale banking? Can the distributed ledger help the resiliency of payment system? Can it help cross-border payments? So we put up use cases, and against use cases, we brought other central bank, private sector, banks together and start building a team who will write code and also build policy and an operational framework to run this piece of new technology. So it was a 5-stage project. And what came out of this program, I think in interest of time, is that we as regulator or policymaker understood this space very well. So now when we make policy, it is more thoughtful because we understand the technology. We understand how it can help to improve the system. Same time, the industry also created a spark to get new talent who could come and be part of the program and they in turn inspired others to start developing the blockchain skills, blockchain technology skills we desperately needed in the sector. Today, I can say proudly, we have close to, I was told, 70 to 80 blockchain companies, and we have the largest concentration of blockchain companies in finance sector in Singapore. So this came as an impact of this Project Ubin. And guess what? We're the only, this program allows us to write program. And how many regulators will write piece of code to be put in a GitHub? So we do that as part of the program. And we bought other central banks, and we completed the 5-phase project by saying that no more experiment. We will start building the next production grade platform out of Singapore to show that DLT becomes part of the new payment infrastructure. And you know that towards the end of the year, last year, DBS announced their exchange, their digital currency exchange, digital token exchange. There are many private sector who started issuing bond on the DLT. Temasek and a couple of them came together to issue bonds, issue equity on the DLT ledger. Philippines Treasury issued their treasury on the DLT ledger. So Asia has seen a massive production grade examples of using blockchain as a way to do business, especially finance sector. China put close to 60 to 70 billion dollar on trade finance on DLT. So you saw, so what you're seeing that having an experiment of the size of Project Ubin, it really catalyzes the whole sector to start thinking how to use this technology. So we are quite hopeful this year we'll see more examples of production grade blockchain and digital currency implementation as we speak.
Sobs, before we move on to another topic, just a relevant topic here is that you're, through building all the software, providing the marketplace, getting entrepreneurs to come together, and now these are production level systems. They are no longer proof of concepts or pilots anymore. You're obviously also collecting a lot of data, and there's a lot of work that's going on in data integrity and being able to provide that data. And I know, in fact, you have something called the Singapore Financial Data Exchange. Can you just speak a little bit about that, what that initiative is?
Yes, maybe I will first context here, then because this question has a deeper question also, because one of the things I spoke in my initial my opening is that infrastructure. Because for the sector to truly adopt fintech, we got to build world-class new modern infrastructure to recast the financial sector on this new system. First thing we did before we come to the SG Findex you asked about is we built a public infrastructure or eKYC on our MyInfo platform. You know, as you know, onboarding customer in the banking sector is the most painful experience. The reason fintechs are so well loved because their onboarding is remarkable.
Yes.
But when the onboard customers is very painful. So first thing we did, we put a public eKYC infrastructure on top of our public data infrastructure called MyInfo, which is essentially a citizen data database on which citizens can authorize data for banks to pull and open accounts seamlessly within few minutes. That was built sometime middle of 2018. We also put together a payment system on top of our existing faster payment system, what we call as Pay Now, where you and me can pay each other by just knowing a mobile phone number or a national ID. And in 3 clicks, I can send money, which is as simple as that. We also put together other small infrastructure which supported the sector to start riding on public rails so that it can be more efficient. As an extension to that, we also, as you rightly pointed out, data is a key part of the sector. And for data to be used thoughtfully with proper governance, proper accountability, proper risk framework, we needed to build a public rail which allows such data to be exchanged thoughtfully. As a response to that, we built something called what we call SG Findex, which is a public gateway where banks can move their data, where customers can pull their data from different banks and see in an aggregated view of all their financial holding and in a single point. They can choose any bank, but really the big picture behind, or the big thinking behind this is that we got to, as a public infrastructure, has to be built for certain area where there's a need for trust and governance. And data is a very sensitive area where we need to have such infrastructure. So this is a starting. We put together a public gateway. More data will come in future, but that becomes our key backbone as customers start start having that ability to pull data and start using the data more efficiently for their own financial planning. So that was the genesis behind how SG Fintechs came about, because we had this desire to build public rails. And I say that for any ecosystem or any country to succeed in fintech, in the space of financial sector or fintech, they must have four fundamental infrastructure. They must have a trusted digital identity. They must have a trusted data system. They must have a trusted, highly efficient payment system. And the fourth piece is a very trusted consumer consent system, where you and me are empowered to share data based on our consent. And that's the only way people can access data.
Wonderful. Sapnendu, we'd love to talk about so many things. And I know I see the clock ticking by. I would be remiss if I didn't talk about two things in this conversation today. One is really, because this is a cross-border conversation, you actually have taken on a very, very big initiative, which is, really business sans borders. So I'd love to talk about that. And then, of course, I'd like to end this conversation with a little more about the FinTech Festival. But let's talk about first the business sans borders, what that initiative is. And I know you have personally championed that, brought it to fruition. It's a 5-stage process that you've gone through. So I'd love to hear your comments on that.
Sure, Puneet. I think business and border is a great example to the topic we're discussing for collaboration, because you cannot have collaboration unless it translates to real meaningful impact in people's life. As we know, during the crisis also, the sector which got affected are small businesses. And we all know statistically, any country you ask, 80 to 70% of the economy is driven by small businesses. And for small businesses, finance and credit is a significant part of their input, which they need to have to succeed. So as a response to that, we created something called Business Sans Border. The product name is called Proxtera, which is essentially is a public rail, or it's kind of a private rail now, where businesses come together to do three things. It's a platform which allows small businesses, whether you're a buyer or a supplier, wherever you are sitting, can find a match for yourself. Once you have a match, you can start executing a trade. And when you execute trade, there are a few things you do. You look for finance. The platform allows to instantly look for people who are willing to finance the trade. You're looking for logistic company at the most efficient logistic company. There are logistic services which are available who can come and help you to support that. Escrow services, licensing, goods and goods certification, legal services. So there are a whole set of basic services which facilitates a trade once a match is done. And the third leg is how to build some kind of experimental data set where different tools can be created, digital tools can be created for small businesses to adopt as they digitize themselves. One thing also we learned during the crisis that SMEs, when they come out of COVID-19, they're going to operate in a highly low touch and high-tech construct, which means they have to use digital tools as a way to do businesses. So having a platform like Proxtera or Business Sans Border allows the trade, especially small business, to start connecting their themselves, and hopefully that creates that digital platform for bringing businesses together to start in Asia and hopefully going beyond Asia with Africa and other markets. And I'm very pleased to say that India has been a strong partner in that platform. TPCI, which is the Trade Promotion Council of India, is part of the program. Business Sans, the Global Linker is also another network in Singapore, in India, which is part of the network. We started executing trade between Africa, Philippines, Singapore, India, and I'm hoping that will grow as we upgrade the system, bring more partners. But what I want to leave the audience with one thing, that collaboration, when we talk, must not be only helping the fintechs to grow, also helping the industry, the ecosystem, the people at large to be able to take advantage of this growing technology infrastructure so that they can improve their own economic life as we look forward. And that's essentially is what we call as a Business Sans Border or Proxtera. And I'm pretty sure more things are going to be discovered as we go forward.
Indeed, very, very impressive. Sapnendu, I want to come back to your face of, there's so much depth that you're doing, but really the face of all of this, where a lot of the world at large interacts with, is your iconic FinTech Festival. I've attended many FinTech festivals across the world, but this is something very, very unique in terms of scale, size, scope, participation, and impact. You've had, you've had state leaders, you had prime ministers, presidents, you have industry captains, CEOs of very, very large banks, institutions, etc. You've also had the royalty of the financial world. I remember in one of your events, Queen Maxima was there. So really would love to hear more about how did you go about doing this thing? And just for our viewers, I have to say this, that one of the highlights, a trivial portion of it is the food there, which I know that you yourself personally curate. But I'd like to get back to really the whole FinTech festival. How did the idea come about? And it has really grown to be a phenomenal, event.
For Puneet, people say that FinTech Festival is a conference, but I say it's a platform because it's almost like a glue we create every year where we bring the best brain together to just have some good 5 days of intellectual conversation, good food, as you mentioned, and some good networking opportunity. But really the larger purpose behind that was to have this ability to have this dialogue every year to talk about what is happening globally. Now, for a small country like Singapore to come to this stage of a large FinTech festival, sometimes even I also pinch myself, how did it come to this stage? I think there are many, even I'm also speculating as in spite of being part of this journey. I think one of the reasons why it became highly successful is that we did not control the agenda. We wanted people to come and set the agenda, what they want to talk. In fact, the way we go about is to tell people what you want to discuss. What are the big topic you have in your mind so we can discuss and bring the best brain together to debate. And we created this platform for many, many, many people who are not well known in the sector to come to Singapore, participate in the debate, speak about it in panels, and truly that become almost like a annual destination, holiday destination for fintechs, financial sectors, thought leaders to come and have this open dialogue. So that's one phase. The second phase, we're quite bold to pick up topics which typically don't attract a lot of viewers. Things like inclusion, things like green finance, things like what you call SME digitization, because these are very mundane, these are not really attractive with fintechs or high tech or AI. But these are very sexy topics, I would say, but these are not that exciting that way. But we insisted that there has to be a value of people coming here in a true sense. So we introduced agendas like inclusion to be discussed. We introduced green finance as a way to think about how the future construct will look like. So having topics which is a broader, impactful, did help to enhance the image of Singapore FinTech Festival. So we can go on talking about it, but truly it has become iconic in a sense. It's not a festival which is about Singapore. It is a festival about the global FinTech. In fact, Singapore participation in the FinTech is quite a small percent. It's truly 130 plus countries' contribution to make it successful. And I really thank all of them to bring us to where we are. And I hope as we look forward, the festival will grow beyond and be part of the global community in a much larger forum.
Thank you. Thanks, Sapnendu. I'd love to go on, but I really, I know these platforms are never enough to kind of get to the full depth of it, but I hope that our viewers here have had an opportunity to get a little bit of sense of what you have done. You truly are a rock star. You've actually, I mean that, from ringing the bell at the New York Stock Exchange to having been out there in Times Square. I mean, you truly are really a rock star. And I think you're a global ambassador for the FinTech world at large and have done tremendous amount of work in helping the agenda. Thank you very much. I feel very privileged to have you on our show. Really, thank you so much for sharing your journey with us.
Thank you, Puneet. But before I go, I want to put a request to the organization which has done this conference that do join us in our journey. We have API exchange. I want to see whether we can collaborate with FinBlue as a partner so that together we can connect the dots and bring the FinTech together to the global marketplace. I'm looking for such collaboration if it suits all of us to be truly global and collaborative in our effort to make FinTech as the core engine for driving the future financial sector.
Thank you very much, and I'm sure they'd be delighted to do so. Thank you very much, Sapnendu. Real pleasure. Thank you.
Thank you so much, Mr. Mohanty and Mr. Pushkarna, for such a pertinent opening to Day 2 of FinTERACT 2021. Up next, we have today's panel on perhaps one of the most relevant subjects in the fintech sector, data empowerment and protection architecture. The session will be moderated by Mr. Chandu Nair. Mr. Nair has over 30 years of experience in industry, consultancy, media and information services. A co-founder of Scope e-Knowledge Center, a pioneering knowledge process outsourcing company that scaled up to 1,000 plus people before his exit, his areas of focus were business development and fundraising, and his passion was enterprise building and transformation. He has direct experience of angel, VC and strategic investor funding and has also been a part of 2 exits. A key focus for him now is entrepreneurship and helping strengthen the entrepreneurial ecosystem. He advises entrepreneurs and enterprises in creating and building their businesses. He is also on the advisory board of a Chennai-based private equity firm and is an active charter member of TiE Chennai. A postgraduate management from IIM Ahmedabad, he has been a member of various industry panels both in India and overseas, as well as a visiting faculty in various business schools. It is my pleasure to hand over the virtual mic to Mr. Chandu Nair to introduce our panelists for today and set the stage for the conversation.
Thank you, Yashaswini. Good evening. Welcome to the panel discussion on data empowerment and protection architecture. Before I introduce the 2 guests that we have, I just want to set the stage on what exactly this thing called the data empowerment and protection architecture is, which is the DEPA for short. According to what I've read, it apparently gives individuals the power to decide how their personal data can be used and shared while ensuring privacy. It is supposed to empower individuals and businesses to get better access to affordable financial and healthcare products. Is this revolutionary? Well, a certain Nandan Nilekani thinks so. He tweeted, "The DEPA draft is out now. India is taking a historic step towards empowering individuals with control over their personal data by operationalizing an evolvable regulatory, institutional, and technology design for secure data sharing." Of course, before we jump in excitement, I must warn you, there are skeptics too who worry about issues of big state surveillance, the use of data, plus whether current and proposed laws are adequate enough to protect citizens and businesses. Entrepreneurs especially, the key audience for this panel discussion, are eager to know what it means and what opportunities await. To talk more about this, we have 2 interesting gentlemen. Mr. V. Chandramoulishwaran, the center head of PayPal India, a pioneering fintech company, and Siddharth Shetty, fellow at the iSpirit Foundation. Siddharth will start the proceedings with an overview of DEPA. Now, before we jump into it, let me tell you a few words about Siddharth. Young Siddharth, I hope he doesn't mind my saying so, who's a fellow at iSpirit Foundation, a non-profit technology think tank, works on India Stack in iSpirit. If those of you who don't know India Stack, it's a set of open APIs comprising Aadhaar, eKYC, eSign, the Beam UPI, and Digital Locker that allows governments, businesses, startups, and developers to utilize a unique digital infrastructure to solve India's hard problems in financial inclusion. As part of this responsibility, his focus is on empowering every Indian with control over their financial health, telecom, skills, and education data through the DEPA. Besides DEPA, he's also working on the technology for the public credit registry of the Reserve Bank of India. That will be a real-time registry of all credit contracts, resulting in widespread access to credit by eliminating information asymmetries. Pardon the jargon, folks. Digital Sky, the digital infrastructure that would enable safe operations of millions of drones in Indian airspace, and the National Health Stack that would lower costs, improve access, and improve quality of healthcare for hundreds and millions of Indians. Now, one thing Siddharth didn't tell us is that he's extremely private individual. Very little you can get about Siddharth on the internet. Okay, one of the things I did find is that as a 17-year-old, he started a crowdfunding platform. And he started it when he was in class 12, and he was wanting to take computer science as an amazing undergraduate course, but he started Fundlined instead. and his family, a business family, was very unhappy about it, and they even cut off funding for his venture. So, you have a person who's an entrepreneur of sorts right from his young age, and at a very young age is also a fellow of iSpirit. Siddharth, look forward to hearing from you on DEPA. Over to you, Siddharth.
Thank you so much, Chandu, for that introduction. And it's a pleasure to be here. Thank you so much again for inviting me and giving me a chance to share what we've been working on in the context of DEPA or DEPA, as it's known. So DEPA essentially, as you outlined, Chandu, its intent is to give every individual control of their data. Now, why is that important? If we take a step back, if you look at other economies, let's take developed economies like the United States or UK, when their individuals became data rich, they were already economically well off. So they had high amounts of discretionary income. And so data was fundamentally used to shape the spending pattern. So you would create an app, capture data about that individual, serve personalized ads, and earn a commission on any goods or service bought through those ads. And that's a hugely profitable and powerful business model. But what's interesting is these same set of companies, while they have some of their largest user bases in India, at scale draw piddly amounts of revenue. And that's because we are still a developing nation. And therefore, our view about 5 years back was that the paradigm of data usage is going to be completely different in India. And we have to invert it, where data, instead of being used to sell things to the user, is actually used to empower them to either access, like you mentioned, better financial services, better health services, or any other that's socioeconomically important to them. And to do that, you need to give control. And how does control get manifested? Because control is a very abstract concept. It gets manifested through consent. That means I should have the ability to consent in a safe, secure manner to share my data electronically from one service provider to any other. And you saw the power of this in a closed, I would say, an initial use case, which was eKYC, which allowed you to electronically share your KYC information and use that to open a bank account, get access to a SIM card. Jio used that to scale to 100 million subscribers in a similar number of days, access mutual funds, and many others. And essentially what DEPA does is it generalizes that same framework. And the way it does that is by taking a unique techno-legal approach to this problem, because data privacy is not just a legal problem, it's come out of technology, and so you have to take a techno-legal approach by first standardizing this consent and then creating a new class of institutions called consent managers that users can interact with, link where all their data resides. So it's completely decentralized, there's no central flow of data. And when you go to any consent manager of your choice, so there's a set of public sector providers, there are private sector providers of it. So it's a competitive marketplace, and you can go to any of them, discover and link where your data resides. It could be with a bank, with a mutual fund, with GST, healthcare providers as well, and then electronically share that with, let's say, a doctor for a second opinion, a lender who wants to look at your cash flows and give you a loan, or various other use cases that may come about. And this essentially allows us, today the entire system, not just in India, but worldwide, is broken. How do you address data sharing? You either physically run around to different branches, downloading PDF, taking out printouts on your passbook, and then sharing that physically with the lender, or you end up downloading PDFs digitally from multiple portals and then uploading those, or you give out your username and password and it is screen scraped. So it's extremely primitive, not just in India, but in various other developed economies across the world. And so DEPA kind of allows us to leapfrog that, because you now have a clear techno-legal approach where users are in control to safely and securely share this information for a particular purpose, for a particular time period. It is revocable. It's very granular, so I can choose what parts of the information I want to share, what parts I don't. And it's secure, so your data is stored in a decentralized manner with your custodians, and the entire data flow is end-to-end encrypted. And one point, as people, you can either read up on this by as Chandu mentioned, the draft that's been put out by Niti Aayog. This is rolling out both for financial data already with the largest public and private sector financial institutions, rolling out for health data as well. Prime Minister Modi announced this on 15th August last year. But one way to think about this is the evolution that happened in payments, right? So the old world of payments, you would go to your custodian, which would be, let's say, your bank, holder of your money, log in through net banking, and then give permission saying debit my account and credit this end destination. And that's a hugely, it's a horrible UX. It doesn't scale. Most people don't know their net banking username and password, right? Web-based modes do not work in a country of 1 billion plus people. And so therefore, what we did is, however, banks have a very important role for monetary policy, grievance redressal, consumer protection. So we said, let money remain with the banks. But in UPI, you essentially unbundle the permission from your bank account and placed it into third-party apps, which are what PhonePe, Google Pay, WhatsApp Pay, and others are today. So if any of you have used these apps, or Beam as well, all they do is they don't sit on your money. They're not part of the money flow. They're purely permission collectors. You discover your bank, you link your bank, and then you authorize permission saying money can go from my bank account to any other, which might be a merchant or another peer transaction. Now, as you've used the system, imagine a more generalized version for data. So those PhonePe, Beam, and other equivalents are called consent managers. In the financial sector, these are companies like One Money, FinView, NADL, CAMS. In the health sector, the National Health Authority, where you can go discover, link, and share your data while they don't store your data at all, and the entire flow is end-to-end encrypted. So that's one way to visualize how the system works and how you as a consumer would be able to interact with it going forward.
Great. So now what we will do is, Siddharth has outlined what DEPA is, and I'm happy that now we have a sound to an acronym, which is DEPA. And now Chandramoulishwaran, as the center head of PayPal, will talk about what it means for businesses and what they should do to keep themselves ready. But before that, a few words about Chandramoulishwaran, and his is radically different from young Siddharth's. Sorry, Siddharth, I'm referring to you as young. No ageism here. So Chandramoulishwaran, who's a PhD in statistics, is Senior Director, Global Data Governance and Regulatory Technology, as also the center head at PayPal, Chennai, which has got more than 1,700 employees. His key areas of focus have been analytics, product and technology, and he's also very experienced at maturing R&D centers in India. Why he's so interesting for us today is that he not only leads the product and technology teams focused on keeping PayPal compliant with respect to data privacy, exams, audits, etc., but he's also previously headed the risk analytics function, working closely with the CRO, that is the Chief Risk Officer, in the Transaction Loss Reserve Committee. And as being the center head, he has leadership responsibility as well for a pioneering fintech company. Now, before this, he worked with a startup investment bank.
So thank you for the wonderful introduction, Chandu. Great to be here. I have been associated with TAI as well for a long time, and very proud of that partnership. So this space itself, as a global MNC that operates in 200 plus markets, we've done a significant amount of work in the privacy space. I mean, DEPA is probably broader the way Siddharth described it. Across many facets, but as an organization, I think treatment would be similar depending on the domain that an organization works with. And I'm sure many entrepreneurs on the call would be curious to see what ideas that they can take home in terms of how they can attempt to solve or offer a service that can help companies solve. Right. So I'm going to share my thoughts from that perspective. I think for us, as a company, and many companies think about it like this, operating in a global scale where you are present in 200 plus markets, I think, regulations and adhering to regulations is a significant IP. For us, it is a differentiator. The fact that we are there in 200 plus markets and compliant with all global regulations, it actually is a huge differentiator for us. And so we welcome these kinds of, thought process, regulation. Many times we participate, in these discussions as well with the regulators. Now, that's number one. Number two, I think, is that for an established company, adhering to regulations is hard. That's the reality. Because they essentially need to rebuild their internal stack to adapt to the new regulations. Now, many times what happens is that the services are built as technology evolves as well. So it's not like ready-made that they can go and integrate into a new regulatory change. And so for privacy, taking privacy as an example, our first phase took probably 8-9 months to be compliant with GDPR, which is a big privacy regulation that came into force, right? And many times, as new regulations come in, we have to continue to adapt to those regulations as well. And all of them require significant amount of change. What I'll do, let me share with you some key components that go into this, right? As any technology company, in my mind, there are 3 broad pieces. This is probably true for a non-technology company as well. When you think of adhering to a regulation, there is a customer-facing angle. This is essentially experiences that Siddharth said, right? Where I, as a consumer, will come in and manage. I will come in and manage. What data I give the organization consent to. I want to understand how my data is being used. I want to tell the organization, forget my data. All customer-facing experiences. And then you have internal discovery experiences, right? So where a company understands, okay, how much data do I have about individuals? How do I store them? How do I give access to them? A lot of those kind of things. And Siddharth mentioned something very, very interesting. Transfer of data from one organization to another organization. How does that happen? How does encryption happen? Who gives permission for that? Do I collect permission every time? There are many nuances here. Another interesting piece is we kind of take for granted is, we're all besieged with cookies, right? Now, I don't mean the chocolate chip cookies, but cookies that are sitting on our laptop every time we visit a website. Now, with GDPR, new regulations, I'm sure with DEPA as well, a lot of a regulation is going to come in terms of how you manage cookies. So companies are adapting to even a cookie-less world in terms of how they should think about it. See, I'm throwing out things that entrepreneurs can catch on. I can dive in at a later point in time, but these are the kind of emerging trends that you see on the data discovery side. Now, governance of regulations itself internally becomes super important. Now, because you're going to have an external regulator look at this, you need to make sure you invest as an organization internally on governance as well. Are you adhering to all the regulations that are out there? And that itself is a massive exercise. Okay. Now, this is essentially a multi-million, billion-dollar industry that is, mushroomed just dealing with privacy. Last year alone, more than $10 billion was invested in privacy-related startups. Okay. Now think about expanding the scope out, broader, to DEPA. Now you're trying to manage health data, you're trying to manage insurance data, you're trying to manage pretty much, many facets that the services that are needed that companies cannot invest on their own, but need to buy from third parties just going to, increase significantly. Many large organizations have actually invested internally in their own systems to try and see how they can meet these regulatory standards. The truth is, it is a tough problem to solve. Now, last thing that I would say, Chandu, is that, this is a very, very interesting space to be in because it is ever changing. It's a very hard problem to solve, and it requires probably some cutting edge technology, right? It requires strong data skills. It requires strong AI, ML skill sets. It requires a strong understanding of policy. It requires strong partnership with regulators. And the list is endless, right? You need to have a strong legal team. You need to be aware what your competition is doing, and the list goes on and on. And, it's not that the regulations are going to end with DEPA. I'm sure 2-3 years later, something new is going to come, right? So I'm going to end with a famous quote that Mark Zuckerberg shared in 2010. He said, privacy is, it's a social norm. Everybody is comfortable sharing, data about themselves in the social media platform. Who cares about privacy? Nobody literally cares about privacy. This was something he made in 2010. We all know what is happening around us with multiple apps around us now, right? There are many signals on the ground. if you get the drift that I'm intending at, right? And so privacy today is central to all of us. It is what consumers care about. And as an organization, if you're not adhering to privacy, you are essentially at a competitive disadvantage. I will pause and hand it back to you, Chandru.
I was expecting both of you gentlemen to give a little more detailed explanation of data. I was thinking there'll be some fancy architecture diagrams and all that, but both of you have disappointed me in that sense. I was expecting a 2x2 matrix and all that, but none of that came. Anyway, let's get on to the question. So you've actually been much more economical with your time, and that leaves me with little more a challenge of asking the right questions. Let me start off with you, Siddharth. Okay, at the broad level, since this is a huge transformative kind of an architecture, like what Nandan Nilekani mentioned, specifically for startups and enterprises, from iSpirit's view, what are the key opportunities it throws up? You mentioned, there's a lot of data going to float around, etc. And the individual will have much more control over his data. But specifically for startups and enterprises operating here, what opportunities does it throw up? And can you go a little more granular on it?
Sure, Chandu. So the way we look at it is you could probably put that into three buckets. I would say the first would be a new class of companies created around consent management. And this is consent management for individuals, consent management for MSMEs, and then consent management for enterprises, each of whom will have different user experience requirements, because many a times they have their own workflows, their own nuances that come in. Just like the money management space, right? An individual may use a mint.com, and a small Kirana store may use Khata Books, or OK Credit, slightly larger, would use Tally, and if you're larger than that, you'd use SAP. So the first area where we see people building companies actively in, and is an opportunity, is in building out these consent managers. And it's also a very strategic play, because one way to think about it is a lot of tech companies at the end of the day, if you look at an individual's digital life, he has a set of identities attached to him. So he's got, let's say, a communication address, which would be his email. He's got his mobile number. He's got certain government issued IDs. He's got a payment address. And really the key goal for a lot of tech companies is, how can I own multiple versions of it, right? So PayPal owns your payment address in other markets. You've got Google, which owns, let's say, your email address, and telecom companies that attempt to fight for being the owner of your mobile number. So what we do expect coming about is, just like you have a UPI ID, you're going to have a similar consent manager ID. And so it's going to be a very strategic play for companies going forward, especially as unconsented data flows have been made illegal, not just in India, that's also the case in GDPR, as well as in other markets across the world. And so that becomes very important. So I would say, bucket one would be the role of a consent manager and companies building in that space. Bucket two would be companies that enable these data consumers, right? So as a user, I can share my data electronically with anyone that I so decide. But these companies need access to tools. And Molly touched upon a set of most important tools, which are your data governance, data discovery, and data governance tools, because now companies are going to be receiving data. Attached to it is a standard electronic consent. And so they are responsible for ensuring that the terms of data processing align with the user's consent. Right? So if I share it for the purpose of a loan offer, you don't use it to bombard me with spam marketing calls later, right? Or if it's shared saying that this data can be stored explicitly for 7 years, how do you expire that? And this does get complicated, especially when companies are using this data for ML models and others. So that is one area where we do expect people to build out these middleware solutions around data governance. And we are seeing a massive market for it for a lot of existing data consumers itself, which are banks, other lenders, other hospitals, and so on. The second, I would say, would be developer tooling companies. So, no-code companies, essentially that allow these data consumers to quickly access and derive value from the data. Whether it's in the financial services space, building out new lending apps, building out new personal finance management apps, robo-advisory apps, insurance apps, underwriting. You can't expect hundreds of banks in India, all of whom would want to do this, to write custom code from scratch or outsource it to a third-party agency. So therefore, platforms, people building out these middleware platforms that allow all of these apps to be created on top, that kind of class of developer tools also becomes very important. Again, not just for financial services, but health services, education, and many other sectors, advertisements, and so on going forward. And the third class of middleware services is what I would call prediction services. So what we are seeing is, again, a major part of deriving value from this data, at least in the financial services space, is often for underwriting. So you're making a risk prediction, right? A risk prediction whether the probability of default of this particular borrower. And so therefore that becomes very important. And so how do you analyze when you're getting streams of GST data, streams of banking data, correlate that to understand the cash flow of a business? Or if you look at it in healthcare today, especially COVID has brought to life that diagnosis is no longer symptom-based, which was the old model. I would go to a doctor, tell him my symptoms, and he'd tell me what likely condition I have. In the case of COVID, you go to a doctor with a biomarker-based test because most people are asymptomatic. So therefore, even in healthcare, we are moving to fundamentally a lot of these decisions being derived from metrics, measurements of the human body. And so you can expect new classes of AI models to be built on top. So now these predictions or these prediction service providers, doctors need to be augmented with that tooling, and hospitals need to be augmented with that tooling. So I would say middleware companies that build that out is another gap that definitely exists in the ecosystem today. And the third bucket, so we've covered consent managers, we've covered middleware tools, which is data governance, prediction services, and developer tools, no-code tools. And third would be new classes of data consumers itself. So if I take a look at the financial services space, just like Bajaj FinServe built out a large new age lending business on the back of EMIs, we expect at least one or two new age lenders to come up to move lending on the back of cash flows. Today, most lending happens on the back of physical collateral. That's the reason why only about 8% of our MSMEs have access to financing. 92% of them don't. And therefore, you do expect multi-billion-dollar lenders to now be built up in this space where they're lending on the back of an MSME's cash flow information and subsequently entrapping that cash. And that shifts the banking system, like I said, from asset-based to cash flow, relationship-based to transaction-driven. The underwriting capabilities becomes very important, and so on. The second is, of course, new players in the money management space. Right? Today, most of us don't know how to manage our money. We might be literate, but financially, we aren't very literate. And so you do expect tools, applications to help us take those decisions a lot better. Plan your budgets, plan your expenditure. So I would say new personal finance management apps coming up. And then new robo-advisors, tools that allow you to plan your investments, and not just investments, but even probably new insurance products. So those end data consumer apps where I as a user consent and share my data with them, and they create this whole new service offering on top of it, is, I would say, the third category of innovation that we expect to see in this data playground as it rolls out. And not just in India. So what we are seeing is that a lot of other countries are now adopting this as GDPR 2.0. One of the biggest issues with GDPR is they primarily took a very legal or regulatory heavy approach to it. And that's created a lot of issues for operationalization because different standards, each company was subject to its own interpretation, raised the cost of doing business in a lot of those markets. And India's taken a fundamentally different techno-legal approach. And as a result, a lot of countries are now looking at this as their version of open banking, and they're taking these standards and globalizing it. And so therefore, for companies building out in this space, this becomes a playground, of course, in the early days that they used to use within the India market, but they can also going forward think about expanding this globally to other developed markets as well, like Australia, the UK, and America, and many others.
Thank you, Siddharth. You opened up exciting vistas for entrepreneurs in India looking at this space. Molly, from two perspectives of PayPal. One is as PayPal as a company, and PayPal who runs a fintech incubator. What are the things you would advise startups who want to tie up or work with PayPal?
Yeah, great question. I think many of the services that are going to grow that Siddharth mentioned. I just wanted to add two more because I feel like that's definitely a venue, and a venue for partnership as well with companies like PayPal. I think how do you share data from one company to another? So you give consent, and then how does data move around? So there are a lot of API slash encryption driven startups that are focused on how do they move data from one place to another place. That's something that we are seeing a lot of traction as well, building on top of what Siddharth was saying. Second one itself is how do you explain how I have used data within the company. That is definitely another fascinating area that we're seeing a lot of research. Explainability of models. Like today, I use your data to tell you, that people like you, purchased A, B, and C. That then okay, are you using my data to recommend? Then if I come and tell you that no, if everybody says don't use my data, then how should a company provide recommendation? That is another fascinating area of research that we are seeing as well. And also, lastly, I think one other interesting facet is that companies are actually sprouting to actually help you check whether other companies are actually help you hold other companies accountable for the regulations. In a sense, I can go to a third party and say, hey, can you check whether PayPal is doing right by my data? That is another interesting space that we're seeing as well. Now, just if you combine Siddharth's and the pieces that I've shared, I think it gives a lot of ideas for entrepreneurs in terms of thinking about new services that they can offer. Couple of other pieces that we are seeing interesting avenues as well, right? So, for example, how do you move to a passwordless world? Can you move to a passwordless world? For example, we incubated a company 2 years back, basically which helped you open your phone just based on how you swipe on the device. No password, just like your swipe. So maybe pressure, maybe the speed, maybe which point you touch on the phone, several factors go in. But the world is moving towards, some kind of, username plus say maybe device, ID rather than a password world, right? So, and there are many reasons for it. The reasons could be that the reasons are like we all have access to we all use like many websites, many places we use the same username and password, and hence one place it gets compromised, then pretty much people have access to multiple other places, right? And so passwordless world is another interesting phenomenon we're seeing. It's broader than just privacy at DEPA, but I feel like that's an interesting space. Now, Chandu, just going back to the question, right? The way we operate in most markets is that we definitely partner with the local ecosystem. For us, if you take Chennai as such, right? I mean, I'm wearing a Star Tank t-shirt that was designed probably a decade back in partnership with TAI. Chandu, you're very familiar because you were one of the mentors for us, right? The whole idea is that as an organization, we don't know everything is a mantra that we always follow. We believe that local, entrepreneurs understand the local dynamics, right? They're very smart. They bring a lot of, diversity in thinking. And so we feel like we need to partner with them. That's why we have an incubator, in Chennai, Bangalore. We have an incubator in Singapore as well, right? And of course, globally in our headquarters, San Jose. This is a way for us to partner with the local ecosystem. Now, this, event as well. So one of the founding partners, as part of FinBlue as well, because we feel like it's a way for us to contribute how you can build products at scale, give that knowledge into the ecosystem, share ideas, and then bounce ideas off and partner to build ideas, right? So that is how the process works. Over the last 4 or 5 years, we've pivoted to actually partner or look for to incubate ideas in the fintech space, right? And the passwordless approach is one idea that I shared in Singapore. One of the incubees is a company that does this data transfer, like they kind of encrypt on the fly and move data around. That's a company that we partnered with as well, right? And so these are just some of the examples. Cashfree is another example, a Bangalore-based company where they figured out a way to get payments in a way which I guess replaces cash, like that, right? I mean, this is all I'm talking about before UPI became such a big hit as it is today, right? And so we need to kind of stay ahead with how the world is changing. So that's why we partner with the local ecosystem. Now, just thinking about DEPA or privacy, I think the GDPR 2.0 that Siddharth mentioned, I think it's a great way for entrepreneurs to think, because what has to happen as you think for ideas, and this is something that we do consciously in PayPal as well, is that you need to be aware of some of the ideas that are floating in the in the ecosystem, right? Be it the government, be it other companies, you need to kind of pay attention to it, right? If you think about it, I think governments are probably the biggest disruptors or innovators in today's ecosystem, whether it is through a company like iSpirit that Niti Aayog partners with, or the company or the government on its own comes up with these ideas. They play a big role in kind of disrupting, right? And so you need to kind of be aware of what the governments are thinking, what is the flavor in the local ecosystem, number one. Number two, I think, is that technology around us is changing at scale, right? Today, if you think about how do you manage fraud in a world where all of us are at home? Think about it. If you just look at the images around us, on our screens, we are exposing personal data about us, right? You can say that, okay, hey, this picture that is behind me is not truly personal data, but there is something personal about me that's coming out there. How do you manage fraud? How do you manage cyber security in a world like this? Very, very important. Yes, it has implications to privacy, it has implications to regulations, but you need to think about this seriously. Now, fraudsters are actually far more professional, or as professional as organizations. If you score the dark web, you will get information about credit cards, you'll get information about email accounts and passwords and all of that, right? So we talk about privacy, DEPA, consent, how do you protect this data, all of those on one side. But then hacking and that data being available in the dark web for other people to use is also something that as organizations, as entrepreneurs, we need to think about. How do you protect this data, the surveillance piece that Chandu, I know we'll get into, but this becomes super important as well in terms of how do you protect a lot of information that's available to organizations and governments as well. That becomes an interesting area of research as well. In a world where pretty much all of us are working from home, you need to think about pretty much a 360-degree view of data, not only how consumers' data gets used, how consumers give permissions, how companies protect the data, how companies end up using the data. So if you think about it from that perspective, I think entrepreneurs have a huge range of ideas that they can pursue. I'll pause so that you have more questions and we can deep dive.
Great. Now, because we have got, I think, 7 minutes more, I think, left, very strangely. I thought it'd be more, but it's not. So very quickly, Siddharth, and I'll probably also ask Molly to do it. You talked about a lot of things that companies should look at: data governance, technology, regulatory partnerships, including with people like the RBI or whatever, legal issues, because how you use data and consumers look at it. Don't you think it's too much for the small startups or the new startups to suddenly cope with all this? What exactly can they do, and how can organizations, Siddharth, like iSpirit, help in this process?
So iSpirit is fundamentally a think tank. And just to add on to Molly's point, a slight nuance there about the government being a disruptor. The government state's role is primarily, and our view on innovation, at least in the context of the Indian ecosystem, is that innovation within financial inclusion and health inclusion will only happen if there's a jugalbandi between public infra and private innovation on top. Now, this is not new. In fact, in the US, for example, a lot of the technology, you and I are talking through Zoom. Zoom is based on SIP. SIP is digital public infrastructure, on top of which private innovators created Zoom. One of the early creators created Skype and many others, right? Or look at Google Maps, which is private innovation built on the back of public infra, GPS. Or the same plays out with the internet that came out of ARPA. Right. So now, while India does not have the capacity to do this public research at scale, and that's a separate class of problem, iSpirit, our real focus has been on building out these public platforms. So designing them in the early stages, working with everyone in the ecosystem to drive adoption. There's often very heavy skepticism because we're not used to India building these out very early on. These are often very messy as well. We are often used to only highly consumerized versions being brought back to India. And so whenever there's messiness, we try to stay away rather than embrace it, which isn't the case in the Valley. In the Valley, people deep dive into messiness, the early days of browser, transistor, any such autonomous cars. And these are long-term journeys. These are, 20 to 30-year journeys. And iSpirit anchors these problems over 20 to 30 years, while of course startups and policymakers take a short-term view, as they rightfully should. And so our role has really been to work with everyone, and we work with them on a pro bono basis, really being the winds in their sail. What we are really excited about is seeing people implement on top of this infrastructure. So we work with any sort of startup or large company that's interested in adopting this infra in the early days. And once it goes on to become a success, then we kind of step back, because then you have many other players providing that help and move on to solve other problems. So if we did the same with eKYC, we did the same with eSign, did the same with UPI. And if anyone's interested in DEPA, please do reach out, and happy to share whatever thoughts, help, context.
Okay, Molly, since you're running short of time, if you were to put like some 3 to 6 or whatever point agenda for startups, you are the one who outlined all these issues. Yeah. What exactly can they do to get themselves geared up for this opportunity?
Absolutely. I think, Chandu, I think you should basically be careful what you bite into. That's my single principle. In a sense, when I did my PhD, I'm going to borrow something from those days. My advisor used to always challenge me with this. He always asked me, he said, Mauli, what is the simplest problem for which there is no solution yet? I think that's the fundamental approach that I would advise all of the entrepreneurs to start with, right? If you take DEPA as well, we've spoken about a lot of things, right? Consent, consumer choice, AI, ML, data, health, education. We've spoken about hundreds of things. I threw in privacy, and we've talked about so many essential services, robotic advisory, hundreds of things we've spoken about. I think the idea here should be, what is one area which is something that where entrepreneurs feel that they are an expert at, and that's crying, there's a need for a solution, or there's a better way to do something. That will be the starting point. Let's not try to solve the entire suite of things that we want a company to walk away with, but actually pick and choose what are pressing problems where we can be differentiators, where we can bring a niche solution to the market. I think that's where I would start. Now, the other place that's important here, thinking about it from an entrepreneur's perspective, is that you need to make sure that there is a differentiated product that we are bringing to the table, right? As Siddharth was mentioning, today the world is very, very complex, and India as a place, probably is very, very different, or not even probably, is different from many other developed nations. What does consent mean for someone who's sitting in, rural Tamil Nadu? What does it mean, right? So translating that into something that a customer needs itself is a huge problem, right? That itself requires some amazing solution. Of course, we haven't even touched the importance of language, right? How do you take something and make sure it's available in different languages? Many, many such opportunities are there. So what I would advise entrepreneurs to do, today we are talking about DEPA. I'm sure tomorrow, Chandu, Siddharth, we'll be talking about something else in the next year, right? But the point is that what is in front of us as a challenge that regulations pose or other companies are posing, and can we bring a differentiated product? For that, you need to understand your customers. So you need to discover what customers need to today. You need to marry that with what you're bringing to the table. Many, many solutions that have seen the light of the day are because of marrying these two pieces and then going and selling, right? I think which is slightly easier once you have a good product in place. I know it's very generic, but given the paucity of time, I wanted to state this in a process or steps that I would encourage people to follow. Of course, happy to collaborate, partner further, discuss offline, and be available for questions later.
Great. We actually have a lot more to talk about, but we don't have the time, which is things like, the personal data protection bill that the government has put out, the issue of surveillance state and big government, the worry about it, which some critics have pointed out. But let me now take the opportunity to summarize, because we are at the end of our time slot for this particular panel. From what both Siddharth and Mauli have said, data especially in India, the value and the use of data is growing, and the proper use of data can improve the overall quality of life. In fact, the Economic Survey 2019 also mentioned data as a beneficial good. Both Siddharth and Mauli have outlined what DAPA is, what it implies for citizens and businesses, the pros and cons of it. Most importantly for this audience, what are the opportunities it throws open for startups who are in the fintech and data domains, and what they need to do to get prepared for this. There are several opportunities too that have been outlined by both the gentlemen, and their offer to collaborate or to help startups and companies who are in this, the offer stands. Now, here's hoping that, to use Siddharth's nice phrase, that public infrastructure and private innovation play a wonderful jugalbandi to help Indian citizens access and use their data more securely and with greater control over it. Thank you, Mauli. Thank you, Siddharth, for your inputs. Thank you, audience, for tuning in. Thanks also to FinBlue, the FinTech Center of Excellence, STPI Chennai, and TIE Chennai for putting this together. Bye for now, folks.
Thank you for having us.
Thank you so much to our speakers for such a vibrant conversation on DAPA. For our final event of the day, we bring to you the perfect continuation of our conversations thus far on partnerships and collaborations. Speaking to us on enabling a conducive fintech ecosystem and the role of stakeholders, we have joining us Ms. Suzanne Chisti, CEO of FinTech Circle, Europe's first angel network focused on fintech opportunities, and FinTech Circle Institute, the leading fintech learning platform offering innovation workshops to C-level executives and online courses. She is also the co-editor of the best-selling The FinTech Book, which has been translated into 10 languages and is sold across 107 countries, as well as the Wealth Tech Book, the InsurTech Book, the PayTech Book, the AI Book, and the Legal Tech Book. She has also been a FinTech TV commentator on CNBC. After completing her MBA, Ms. Chisti started her career working with a fintech company in the Silicon Valley, and over the years has worked with Deutsche Bank, Lloyds Banking Group, Morgan Stanley, and Accenture in London and Hong Kong. Ms. Chisti is an award-winning entrepreneur and investor with a strong expertise in fintech. The keynote will be followed by a fireside chat between Ms. Chisti and Mr. Sanjay Tyagi, the jurisdictional director of STPI. In this role, he is responsible for promoting, facilitating, and regulating IT, ITES, and ESDM units covering Tamil Nadu, Pondicherry, and Andaman and Nicobar Islands. He is a Government of India officer with 25 years of experience, including consulting, strategy development, policy formulation, evaluation and performance measurement, budgeting and resource mobilization, project management, public outreach, and many more in mission mode implementation of projects. During his career of 25 years, he has undertaken several assignments of national and strategic importance. He is a founding officer of STPI and has served this institution since 1994. His previous roles across capacities at STPI have enriched his expertise in project formulation, implementation, and management, including techno-financial analysis for investment decision-making and cash flow planning.
I will prepare today my thoughts about how to do that, with everything what India has on offer, which is so much technology talent, so many great fintech companies, and also very helpful government and very large banks and leading financial institutions. So on this slide, you see an overview on our ecosystem vision. So when we started out at the center with the core, which we believe are the entrepreneurs. It's really the fintech founders, the fintech entrepreneurs. These are the ones we need to help initially to get off the ground, start their fintech businesses. In order to do that, we need investors. So that's our inner circle, the fintech investor network, where we support fintech founders to grow with the best capital, and we call it smart capital. Then our second circle is about the people around those founding teams who can help them become successful. This includes, of course, corporate clients, so the corporate network of banks, of asset managers, insurance companies, private wealth management organizations, private banks. So all these corporate clients for B2B companies, but equally the partners, law firms, marketing companies, headhunters, software development teams to outsource development. So this is also very important to speed up the route to market. And then we have got, our experts in our FinTech book series, which are our editors, our co-authors, more than 500 experts overall, which again help our founders to grow. And then the next key thing is to publicize what is being done successfully. So we have built up overall, it's more than 200,000 people whom we reach out on a daily basis on Twitter, on LinkedIn, on Instagram, via our database, via events, conferences, and publications. So this is really important to reach and share the success of fintech companies so that people know about those new names, because some of those companies become big success stories very quickly. On this page, you see our stakeholders, founders, and investors, a little bit in more detail. So our founding companies come from all ranges of fintech. That's very important to keep in mind, that the stakeholders in the fintech sector are diverse. So they might be, in terms of business model, they might be business to consumer, they might be business to business, they might be platform-based business model, or there might be businesses selling to the government, selling to your regulator. So these are more reg tech, legal tech companies. So all of it is part of fintech. And of course, we have got fintech companies in the retail banking sector. We've got them in the corporate banking, investment banking sector, in the private banking sector. Equally, we've got fintech companies now who bridge into other sectors, such as the telecom sector, for example. That's Länderweise in this example. So we see very interesting developments where fintech not only supports the fintech sector, but it supports, the wider economy, in fact. And that's key. And of course, what is important when a fintech founder founds his or her company, at some stage, many of founders would like to exit. So in order to make this ecosystem successful, there must be exit partners, basically, which means acquirers. Who will acquire the fintech company at some stage? Might be 7 years in the future. Sometimes it never happens. Sometimes it happens earlier. But this is one way of rewarding the founders for taking all this risk, working not 40 hours a week, but probably 80 hours a week, for many, many years, and then getting rewarded with a nice exit, which then allows them to reinvest in the fintech sector as investors potentially. So these are 3 exits which we have achieved for our portfolio companies. And the interesting thing is that the first one, for example, Compare the Market, is an aggregator of finance solutions in the UK. So you could call it a fintech company itself. So a very large fintech company acquired a small fintech startup Bean. And of course, Santander, we know, is a large bank, global bank, acquired a fintech company, and Legal & General, a large pension fund asset manager, acquired another fintech company based on the asset management sector and pension sector. So we see lots of activities here, and that's very important for founders to know that financing will not dry out on the journey to grow the business, and there might be exit opportunities at the end. So if I move now to the next stakeholder group, these are experts. There are lots of finance, lots of technology experts in India. And what we have done, at FinTech Circle, we tried to document their knowledge in our series of books. And these books, are the FinTech book series. They're crowdsourced. And we also, the latest book we published is FinTech for Dummies. They're all published by Wiley. But it's very important to have experts who guide fintech startups as mentors, as advisors. They might join the boards, and those experts help again, because it's not easy to spend the money wisely, which often startups get. In order to spend it in a wise way, you need to have experts advising you as well. So to get the expert community helping fintech companies growing up is really an important stakeholder group. Another one are corporate stakeholders. I mentioned here 2 accelerators and incubators, and then 3 financial institutions. So we are working in the UK, for example, with Accenture. They have launched a very good accelerator, which is called the FinTech Innovation Lab. In Europe, we're working with the Elevator Lab, which is the largest incubator accelerator in Eastern and Central Europe. We're also working with Société Générale. So Société Générale is a bank. They, for example, set up their own internal incubator, you could say. So their goal was to ensure that their own employees become entrepreneurs. And we call this actually intrapreneurs, because you don't want your top employees to leave to found fintech companies. Ideally, you want your top employees to stay in your bank, but then create new businesses, by becoming entrepreneurs in your bank, using the best fintech know-how and starting your own fintech startups inside an existing institution. So that's what we did with SocGen. We did it here in the UK, for their employees. BNP Paribas, for example, we worked with them on a global hackathon. So here the idea was to get the best fintech startups applying to solve challenges BNP Paribas faced and their clients faced. So very important, to reach out again to the fintech universe for solutions. And MasterCard again provides a fantastic scheme, to help entrepreneurs to get access to the expertise of MasterCard, as an example. So these are companies which are an example of what you can do. So it's not just selling into large companies, but there are lots of different ways of collaborating. And so these corporate stakeholders are key, and they play a very important role to fund as well to some extent, and to help to get the fintech sector coming together. The next stakeholder group, very importantly, is the government, our universities, and the media. So when I think about the government, the government has got a huge role to play to create a conducive environment for the fintech sector to flourish. And there are various ways of doing that. In the UK, for example, our UK government has launched, many years ago already, tax regimes which encourage early stage investors to invest in fintech startups. And that's important because as an early stage investor, if you invest in 10 startups, you probably lose your money in 5 startups. Then 2 or 3 we often call the living dead, because if you're a minority investor, you don't get your money out. So there are only 1 or 2 out of 10 who need to be the super performers to really pay for your whole portfolio. And what this means is that you take lots of risk. And in the UK, for example, there are tax regimes which help investors at early stage to reduce the risk by giving them an income tax relief of the money they invest in startups. And this is significant. This is about 30 to 50% of the money angel investors invest into fintech startups, they get back as income tax relief. So a very important scheme, for example, and also government challenges, awards. I'm a mentor, a judge at Nesta, which is a government open banking challenge to facilitate the PSD2 implementation, which is a European law to support open banking. And again, there were nice cash awards, for the best fintech companies who won this program. The second key stakeholder are universities. Universities, of course, they provide the talent pool. They educate the students, the employees of tomorrow, the founders of tomorrow, that the research on AI, on machine learning is really being dedicated to in studies. So nowadays, when you study finance or business, and you don't study fintech, you're losing out. So as a university, most universities nowadays globally offer FinTech modules in their courses to prepare the students. And last but not least, on this page is press and media. That's another key stakeholder. I remember, when I'm Austrian initially, so 20 plus years ago, when I finished my university, most of my colleagues, basically the best students, in Vienna, we wanted to join large companies. We did not want to become entrepreneurs because at that time, entrepreneurship was seen as what people would do who don't get jobs. It was not seen as your first choice for the best students. The best students wanted to become consultants or they wanted to become investment bankers, but not startup founders. Today, the system has changed completely. We see often the best students, from Oxford and Cambridge and top universities worldwide, they want to become a startup founder and not join a large company. And this shift is partly due to the press and the media because they celebrate the success stories of founders who became multimillionaires, after lots of hard work, but they celebrate, and really talk about what you can do, and how does entrepreneurship work. So they play a key role in the whole ecosystem as well. And so I wanted to share with you a few lessons for the last few minutes of my presentation. The first lesson is that the key of startups, the big advantage startups face is that they are fast, that they are very agile, that they can move quickly. They can change their decisions, they can change the whole focus of the business within 1 week. So this is a key advantage. And therefore, it's important not to be slowed down. So if you're a startup, one of your key priorities is to focus because that you cannot, for example, if you're a business-to-business startup and you want to sell into banks, you cannot work with 10 banks. You only can work maybe with 1 or 2. So you want to choose the banks who are the most friendliest to startups. And one of the key things, for financial institutions to be friendly towards startups is to respect that startups, their necessity is to be quick, which basically means you need to also try to make faster decisions when you decide do you want to work with them or not. So it's much better to give a quick no, no, unfortunately we can't work with you, instead of prolonging and saying maybe, and this takes months and months, and maybe after 6 months, it becomes a no, I'm sorry, but we can't work together. Because this wastes the startups very valuable time. And so very important to respect and try to be fast, in your decisions as an institution. And for startups to not be, reduced in their speed. The other key thing is to learn from each other. In the UK, for example, banks worked on speeding up the onboarding process for startups because what banks realize is that if I want to offer the best products and services to my millions of clients, why should I invent everything in-house? It's much, much better to choose and work with the best fintech companies because they've done the whole innovation work already. They've created the best products, but they're lacking the customers. So we can either white label their solutions under our own brand name and reach our millions of customers, or if the fintech company already has got a brand name, we can maybe co-brand, and reach out to our distribution network. And so the key thing is, that we want as a bank, we want to be the one working with the best fintech startups, not our other competitive banks. And so onboarding is key. And as we know, startups often don't have 3 years financial statements, which normally would request, from a new company potentially to work with a large bank. So the whole onboarding process has to be much faster and has to be more appropriate for the stage startups are at. And so that's another key thing which we learned in the UK. One of our banks, they managed to create a 4-page form to create and onboard startups, which is fantastic, much, much better than 50 pages long documents, which would require lots of legal work to go through. And often startups don't have their own in-house lawyers, of course. So one has to be able to work together. The other key lesson is that stakeholders are fluid. So some of the startups grow very quickly. So I've worked with a bank in the UK who rejected a startup as a client. They wanted to open a bank account, and they didn't allow the startup to open a bank account. And now this company is worth more than 1 billion in valuation. And now the company doesn't want to work anymore with the bank. So this is, an example. Don't underestimate the speed. Really, startups are fluid, and you can very quickly become profitable. And large scale-ups might then become acquiring of small startups as well. And very important last point, of course, don't underestimate the competitive threat from global tech giants, because global tech giants are all moving in. We're talking about the US tech giants, we're talking about the Chinese tech giants. Everybody moves into the financial services space, offers products already. So any financial institution needs to be prepared, needs to invest in technology to really stay competitive. And so for large players, our final advice, and my final advice is, one should give before you take, which basically invest, become a good stakeholder in this ecosystem so that you're a trusted partner to fintech companies. The rewards will be great, because the rewards will be then that your institution will become a successful player long term. And so these are my key points, which I wanted to share with you. And I'm very happy to answer any questions, and of course to continue now with our Q&A session. So I hand back to our moderator.
Thank you, Suzanne. This is a wonderful keynote address which you have given, and actually you have laid down the foundation of the, the religion of the stakeholders when you said that they give before they take from the support from the growing system. You have to support the system to grow first. You have to nurture them, and that is the basically role of the stakeholders. Whether it is a corporate stakeholder, or it is a mentor stakeholder, or it is a government, universities, or media, everybody have to contribute and actually contribute for the growth of the startup ecosystem. And we have to validate their efforts. We have to give them the tax relief from the government side, as you said. And we have to, recognize by giving them awards. We have to organize the open banking challenges, as you said. So all these efforts is the contribution of the stakeholders for nurturing the ecosystem of the fintech startups. You're absolutely right that unless we will nurture the new skills in our university academia, it will be very difficult for the fintech people to hire the manpower. And the manpower is the key for the growth of any sector in the world, be it IT sector or it is a fintech sector. And another good thing of your keynote address is that we should celebrate the founders' success. We should celebrate them, we should award them, and we should make the entrepreneurship fashionable. That is something which, unless the young generation will not join the entrepreneurship movement, probably the innovation will stop. They should be encouraged at the university level for coming for the innovation and filing their own IPRs. These were the highlights of your keynote, and it was a wonderful manner. I would like to come back to my few of the questions which I have, tried to frame. And though you had such a long career and such a long list of the achievements, and you have really worked hard to create the fintech circle. It's a largest global fintech ecosystem globally, where you are having more than 200,000, the connections with the fintech startups and fintech leaders. So my first question will be how you are able to do this, how you are able to create this ecosystem in last several years of your engaging with the startup ecosystem.
Yes, thank you very much. That's a great question. And I think one of the key things, how we created this ecosystem is having certain values. And I think you mentioned certain values. One of those values is respect. Respect for each other, because often people, and I've been a banker, for 15 years. So I come from the financial service sector myself. And as a banker, often you look down at small companies. And this is wrong, obviously. So what we said at FinTech Circle, we don't want this at all. We want to look at people at the same eye level. We want to respect and work with FinTech startups, with investors, with financial institutions who respect each other and appreciate what each stakeholder brings to the table as an equal partner. Because fintech companies are not anymore just tech suppliers. This was in the past. You know, in the past, we talked about tech suppliers and they were kind of below their clients. But fintech companies, they are strategically important. You know, they often have ideas large institutions don't even have. So they are equally strategically important. So this was our outgoing value proposition, that we want respectful, you know, choice of equal partners. And then we said, you know, because I've studied in the Silicon Valley at the time the internet was being invented. And I realized at that time that, you know, the internet, of course, changed our lives. But in 2015, when I founded, in 2014, when I founded FinTech Circle, we saw the first FinTech startups, you know, being here in the UK looking to raise money. And there were angel investor networks here, but they did not have FinTech investors inside them. So the angel investors were all sector agnostic. So if you were a FinTech company and you presented to a group of investors who do not understand finance or do not understand technology sufficiently well, they will never invest in a fintech company because they feel uncomfortable. So that's why, you know, we said for our investor network, we need to get only the focus on the best fintech startups and the best fintech investors. And we want to bring both together on a regular basis, because then we can have a core stakeholder set, which really makes a difference, you know, to the economy and to the world. So that's how we started out. And then we realized that many of our investors knew about, and also our startups, you know, were focused on certain aspects of fintech, but didn't realize what else was out there. And this included myself. You know, for example, I knew a lot about capital markets, about asset management, but I knew less about cybersecurity in fintech. And so we said, let's write the first book. This was in 2015. You know, we said we need to be able to educate people who want to move into the fintech sector, and we want to make sure that our experts come together. So we wrote the first book on fintech worldwide, and we said, instead of having just one or two authors who could never cover the complexity of fintech in its entirety, we open up the process of writing a book to the experts globally. And experts globally meant, you know, founders, meant investors, meant people in banking, you know, who are working on cutting edge solutions. So we said it's an open competition, and it's open and democratic. So we had people applying from South America. We had authors from India, you know, who wrote chapters for our first fintech book. And it was nobody had a guaranteed place. So we had very leading consulting companies who did not get in because their ideas were not interesting enough. But then we had small startups, you know, small founders who were 3-5 people, but their ideas were skyrocketing. They were world changing, you know, so they got a space in the book to write about their thoughts. So this is, you know, how we start building the ecosystem from the center up, you know, and growing it over time. And then, of course, building our global community, you know, on social media, which is very important because it connects the world. And we are proud of our 200,000 followers, you know, who can learn every day on LinkedIn, on Twitter, who can read about fintech trends, and where we can reach out and see what goes on in the whole world.
Thank you, Suzanne. You have very rightly said that, you know, all the investors, they are actually sector agnostic. And when they are going to invest in a startup, they need a lot of information, a lot of feedback, and a lot of hand-holding probably. Investors also need a hand-holding. And probably if there is a platform which is available to support them and tell them the nuances of the fintech sector, probably that will be very, very encouraging. So that brings me to my second question, that at the core, you run an investor network. And then not only you bring in the investors and convince them to invest in the fintech, but then there is a very bigger challenge in front of you, that how to select the right startup, how to select the right fintech startup. And what is that valuation proposition which you are putting in? Because there are 3 types of the, you know, investors. There are a few people who wanted to be the angel investors, only seed funding they wanted to provide. And then there are the bigger investors. So how you identify these fintech startups so that all these 3 types of investors can, you know, get in?
Yes, a very, very difficult question. And, you know, the way we do it is number one, because in Europe, we are the only investor network which focuses on fintech. So we have very nice deal flow. So the best companies apply to us on our website, which is fintechcircle.com. You know, companies can apply online, and then we get all these applications. And for the applications, we require 3 documents. The first document is an investor deck, your investor slide deck. The second is an elevator pitch, which is a 3-minute video, which our founders can record on their own mobile phone. And then they have to complete a questionnaire. And based on these application forms, we review those application forms, and then we select the top 16 companies. And these top 16 companies we invite to selection days, FinTech Circle selection days, which are run over 2 days, where we've got a jury of about 8 investors with us. And these 8 investors and myself, you know, I chair the jury. We then review each of those 16 startups, and we ask them questions. They present to us. We do a Q&A. And then we choose the top 8, the top 50%. And what we are looking at are a couple of factors. One is the team. You know, we want that the team is very strong. Ideally, that the team has got a competitive edge, so that the team has got something special, you know, which is difficult to replicate in the knowledge, the expertise, the strength of the team, you know, complementary skills. So we're looking at the team very much. The second thing is we're looking at the product and the solutions they're developing. And is it unique in the market? What is special about it? Because we see a lot of applications, you know, so we see lots of fintech startups, and many of the companies do the same thing as other companies. So it's very difficult to differentiate yourself. So we're looking for unique things, you know, things you can protect. Sometimes with just being quick, fast to the market, sometimes with intellectual property. So we're looking, you know, what is the special thing the company offers? And is the market big enough? You know, is the problem they're solving a big problem which needs to be solved and which they can charge money for? So we are looking, you know, for companies also where the financials make sense long term. So it's okay to be loss making at the beginning, but long term, we want our companies to be profitable. You know, we don't want to be just having loss-making companies forever. So we need to look at the so-called unit economics. You know, does it make sense? At what stage does a company break even? What are the unit economics? So what are the financials? And do the companies, you know, build a very good business and financial model? And then what we look as well is the competitors, you know, what competitors are out there, what valuations have those competitors achieved already, if they've been sold already, or, you know, what can we see in the marketplace? And then, of course, we look at also what do our investors want to invest in. So, for example, you know, we're looking at our investors. We've got lots of angel investors, but we're also working with venture capital funds. And we will start to work more with also the early stage private equity funds. And those investors looking for companies who are break even or who are starting to become profitable. So these are later stage fintech scale-ups. So for example, last week at our selection days, for the first time, we chose not only 4 startups, but also 4 scale-ups who are either profitable already and just need the money now to scale up. You know, they are valued, of course, much higher than the startups, but it's less risk. You know, for an investor who maybe might be more risk averse, if you invest later and you know the company has a proven business model and just needs money now to grow and scale up, and this is interesting investment opportunities as well.
Yeah, I mean, great. I mean, as you said that, you know, it is very important to see the team and the amount of the product which they are developing and who are the, and then you have said lastly that the investors actually interest is supreme. He should be able to understand that there is a scalability and there is a revenue which is flowing in, and the startup have all the potential to grow. But over here, I would like to bring your fine attention to one of the, you know, survey which has been done by a very famous magazine, which I'm not remembering right now, where all the chief information officer of the very, you know, global banks, they have said that we would like to work with all the fintech startups in order to reach out to our customers. Probably they are not a competition for the banking system, but actually they are complementing their efforts the banks, all the banks to reach out to their customer and giving them a different experience of using the banking system. So do you feel that inclusion of these banking system in creating a problem statement, because there is a buyer's market, they are the transformer of this buyer markets. So do you think these people who are into the banking system, large banking system, they also play a role in giving a problem statements to these startups, and then it will become more easy for the investor to invest in them?
Yes, very much so. I believe in that very much. I think the large, banking systems play a key role to acknowledge that startups in reality are not the competition, they are partners, because the competition are the tech giants. Those are the tech giants. I mean, from Amazon to Alipay, to Facebook, to Tencent and WeChat. Those are the competitors in reality. But the startups normally are the best partners who innovate and help you as a large institution to help you innovate much faster. So I totally agree with you. That's important that the banking system sees startups as an opportunity almost to innovate at lower cost, because you don't have the fixed costs of your own technology teams in-house. And I've worked for lots of banks before, and lots of technology investment in-house was not successful. It had to be written off after a few years because what had been developed in-house was not successful. Nowadays, you don't have to develop everything in-house. You just buy in what you need and what will be successful. So you've got a much better, from an investment point of view, as a large financial institution, it's a much better choices you've got available now, to work with fintech companies who can help. And I think also consulting companies have got a key role to play, because there are banks who don't or feel maybe worried to have contractual arrangements with too many small startups, because they can't handle it from an operational or the administration or procurement point of view. But they don't mind to have a large consulting company with whom they're working with anyway. And then these consulting companies work with all the startups and bring all the startups on their platform. And then they sell the platform, to the banks. We see that, more and more, and we, for example, an example I can give you is in operations, often these platforms are called digital workers. And digital workers is, where banks work with consulting companies who then provide a platform to automate operational activities, to automate them, to make them more effective and less costly is key thing. So the cost benefit is here key. And of course, to reduce headcount, in the bank as a result. But the key thing is here that these consulting companies provide these operational efficiency solutions via these digital workers. And normally those consulting companies work with lots of fintech startups, which they plug in. It's like plug and play. The ones which make best sense. And so for the bank, they only have to have one contract to sign, which is the consultancy agreement, but then all the startups come under the umbrella of the consultants. So that's also a key model which we see, happening and working very well.
Thank you, Suzanne. So we are also inspired, as I told you, that the fintech journey have already started in India, and there is a disruption which is already happening. And there are some 2,174 companies which are working in different domain in India. And if I say cumulative last 3 years investment, $70 billion have been invested in fintech company in India. So this is this is the objective of this whole program of the FinBlue, which we call FinBlue, a Center of Excellence in Fintech, which the government of India have set up at Chennai. And we call it FinBlue because Fin stands for finance, and blue, blue shows the unabated and unrestricted growth like sky. So we have given the name FinBlue over here. And we started this journey in a very methodical way. And we sat together with all the stakeholders, and we organized a design thinking workshop. And our chief mentor is from the industry, who is a very biggest proponent of the design thinking model. And we have come out with 6 pillars. And I'm very happy to tell you that they are perfectly in sync with the whatever the ecosystem which you have explained in your keynote address. The first pillar is the understanding buyer's needs. What does the buyer want? What is the requirement? So we should, and when we understand the buyer need, that is automatically have become the opportunity for a fintech. The another pillar which we have identified is the international partnership. We have to understand the best practices which is being followed by in the world, and we are looking for the international partnership. Funding framework. We wanted to create a funding framework that what are those 5 questions which an investor will ask to the startup guy, and what are those 5 things they should have in them before going to pitch against the investor. So we try to develop that framework which can help the fintech startup before going to an investor. And then we also think that when people are developing fintech product, there should be some benchmarking mechanism should be there. So we are thinking that FinBlue, we will start developing a benchmarking model, and we are looking for a partnership into this at the international level, where people can help us in developing the 1,000-point criteria for evaluating a product, a fintech product. And we can benchmark, and we can tell when they are going out from this program that this product is of that level. And that will definitely help them, being, accommodated by their buyers, by the bankers, or by any institution, financial institution in the world. Last is the policy and the technology framework, which need to be in place, because there is a lot of regulatory compliance which is required by these fintech companies, because the entire financial institution is very, very highly regulated, and it is very hard for them to test their products. And we are trying to create an ecosystem for them by setting up a sandbox over here, where a lot of APIs are being being formed, and where a lot of tools are being given to them so that they can test their products online. And last but not the least, the monitoring framework and the training framework. So all these 6 pillars have been identified by STPI. And as you know, that second pillar says international partnership. So I'm looking towards Suzanne for the international partnership with you. And we would like to understand from you that how you can support us, how you can join FinBlue initiative for the FinTech Center of Excellence.
Definitely will be an honor to work with you, and FinBlue in an international partnership and create a fintech bridge, between India and the UK, where we can help fintech companies from India to go global, to access global investors, to sell their products, services globally, to be globally well known. And so in concrete terms, what you could do would be, on one side is our membership. FinTech Circle has got a membership for startups. And what we should do, probably we have to talk about this, would be to give your members a preferred access to our membership, at reduced costs, so that your members can become global members in FinTech Circle. We can help promote them, to make sure that they are known, not just in India, but outside of India as well. And we can put them on the global stage. I think this would be great, because I think there's so much Indian know-how which we don't know about it in the West, here in London. And so this would be a great starting point, to become members of FinTech Circle membership. The other thing would be, like you said, the best fintech companies which graduate your FinBlue programs and who would like to scale up globally, we could help them find investors, help them maybe connect to venture capital funds, to private equity funds at a later stage, so depending on which stage they're at, but to help them on the fundraising journey as well. And also help them, when they come to London to sell here, to connect with our contacts, because we are based in London. And I live in London since 22 years already. And so we know most banks, we know lots of buyers, we have got lots of good contacts here. And often if you come to a country for the first time, you don't know anybody, you don't know where to start, So we can be the soft landing ground where fintech companies who want to come and explore opportunities and market entry into the UK, where we can support you on this journey and support your fintech companies on this journey. So I would love to work together very closely, because I think what you do with FinBlue is excellent. And I think the systematic approach in your 6 pillars you outlined covers everything which needs to be covered. You've got the best program in place. And so I think your fintech companies will benefit from that. And the whole economy, to be honest, in India will benefit, because I think the competitive edge of a country depends on the quality of its startup ecosystem. So it's a really key investment for the whole country to encourage the fintech ecosystem to flourish.
Thank you, Suzanne. I think you have very nicely laid down the foundation of the relationship between the FinTech Circle and the FinBlue. We are actually, making our best to create an environment for the FinTech ecosystem in our country, and the required infrastructure is in place. Sandbox we are launching. We have already launched in this event, and we want to see that how even the FinTech startups in UK would like to test their products on a scale. India is the place where we can provide the scale, and if they are having B2C, applications, probably that India is the breeding ground for such type of applications. And B2B and B2C, we are having a perfect platform laid down over here. The sudden growth in this digital adoption rate in last 1 year, which has gone as high as 87% in India, I think we will be a leading force as far as the fintech is concerned. And we, through your platform, we would like to invite your members also to become the part of our ecosystem. And I see a great opportunity and great synergy between FinTech Circle and FinBlue. I'm very grateful that you have accepted our invitation and joined this FinTech session. Thank you very much, ma'am.
Thank you very much. It was a pleasure talking to you. Thank you.
Thank you so much to Ms. Chisti and Mr. Tyagi for this fitting finale to Day 2. That brings us to the end of Day 2 of FinTERACT 2021, presented to you by FinBlue, a FinTech Center of Excellence by STPI, and ELCOT, adding value through IT. This conference is hosted in partnership with TiE Chennai. Our thanks to our sponsors, Oasis, for their support. We hope you enjoyed the sessions we brought to you today and have many thoughts and questions on your mind. We look forward to seeing you back again with us tomorrow evening for the last day of FinTERACT 2021. Until then, this is Yashaswini signing off on behalf of FinTERACT 2021.